In this video, we will be discussing the recent Hindenburg Report that was issued regarding the Adani Group. The report has sparked controversy and raised questions about the practices of the multinational corporation. This video will provide a comprehensive overview of the report, its finding and its implication for Adani Group and its stakeholders. Stay tuned for an informative and insightful discussion. What's up everyone, and welcome to our YouTube and Facebook channel. If you are watching our channel for the first time, please consider subscribing. And if you like our videos, please give us a thumbs up. And now, let me tell you about the biggest fraud in corporate history. Following the release of Hindenburg Report, the Adani Group faced significant financial losses. The report's allegations of improprieties and questionable business practice caused a wave of public concern and mistrust, leading to a decrease in stock prices and a drop in investor confidence. As a result, the company saw a decline in its market value and a dip in its financial performance. The Hindenburg Report has a profound impact on Adani Group, causing them to suffer losses of a staggering $65 billion. It is one of the largest losses experienced by a corporation in recent history and highlights the far-reaching consequences of negative publicity and investor sentiment. Hindenburg Research is a financial research firm that specializes in investigative journalism and short-selling research. This company was established in 2017 by Nathan "Nate" Anderson. He is a professional chartered financial analyst and a chartered alternative investment analyst. The firm is known for its controversial reports that often cause significant drop in stock prices. The name Hindenburg is associated with the famous Airship Disaster of 1937, in which the German airship, the Hindenburg, caught fire and crashed, killing 36 people. The name was chosen by the firm to evoke a sense of uncovering the truth and exposing wrongdoing. Much like the investigation into Hindenburg disaster helped to uncover the cause of the crash. Why is Hindenburg Research so confident? Why do they have so much faith in themselves? We need to see their past record to get this answer. Before this, they levied accusation against several companies and short-sold their stocks, such as Nikola, Vince Finance, Genius Brands, China Metal Resources Utilization. In total, since being incorporated in 2017, they have targeted about 16 companies, and they short-sold the stock of these companies. They published a similar report in September 2020 about Nikola, claiming that the company was lying. After the report, the founder and executive chairman of Nikola resigned from the company, and 2 years later, Nikola's share fell 71%. In May 2020, Hindenburg targeted China Metal Resources Utilization, saying that there were several irregularities and wrongdoings in the company, that there were frauds. After that, the share of this company tanked by 90%. In June 2020, Hindenburg wrote about Genius Brands. Its share price was $6.86 per share. After the report, the price fell to $1.5 per share within 2 months. In these cases, Hindenburg alleged some fraud or scam, and they launched a short attack. A Bloomberg report shows that about 30 companies targeted by Hindenburg, on average, the day after the publication of the report, lost 50% of the value of the stock. And over the next 6 months, on average, their stock fell by 26%. So the track record of Hindenburg Research is quite successful. The stock of several companies targeted by Hindenburg crashed. And now understand what short selling is. Short selling is a trading strategy used in the stock market to bet against a stock price increase. It involves borrowing shares from a stock from another investor and selling them with the hope that the stock's price will decrease. The trader can then buy back their shares at a lower price and return the borrowed shares, realizing a profit. Short selling is considered a high-risk strategy as there is unlimited potential for loss if the stock price increases instead of decreasing. However, it can also be a valuable tool for investors who believe a stock price is overvalued and due for a correction. The Adani Group has experienced exponential growth over the years, making it one of the largest multinational organizations in India. The company's diverse portfolio and strategic business expansion has driven its financial success. The Adani Group has a net value of $120 billion, with a significant portion of that growth occurring in the last 3 years. This rapid increase in value can be attributed to company's expansion into new markets and its successful execution of high-value projects. Through strategic investments and partnerships, the Adani Group has been able to rapidly accumulate $100 billion in only the last 3 years, solidifying its position as a major player in the global economy. There are 7 major stock-listed companies spread over a large number of sectors. Adani Green Energy generates renewable energy. Adani Enterprise is engaged in coal mining and trading. Adani Transmission is engaged in power transmission. Adani Total Gas for gas distribution. Adani Power for coal-based power generation. Adani Ports for ports. And Adani Wilmar is a joint venture with Singapore's Wilmar International. Ever since the Hindenburg Report was published, Adani slipped on the 4th position and then is in the 17th position at the time of making this video. In total, the share of Adani Group lost $65 billion in market value. Now let's see what this report is about. This is a 106-page report. The title of the report is, in their opinion, this is the corporate history. Hindenburg Research claimed that they have invested more than 2 years in this research. They levy a large number of allegations against the Adani Group: money laundering, stock manipulation, accounting fraud, corruption, theft of taxpayers' funds, creating offshore shell companies. They claim that companies of Adani Group have been the focus of 4 different government fraud investigations. In this report, it is said that Gautam Adani's young brother Rajesh Adani was accused by Directorate of Revenue Intelligence in 2004 and 5. Allegedly, he was arrested twice for forgery and tax fraud, but later he was promoted to the managing director of the Adani Group. The next accusation was on Gautam's Adani brother-in-law, Samir Vora. It is alleged that he was the ringleader of a diamond trading scam. He was later promoted to the executive director of Adani's Australia division. There is also an accusation against Gautam Adani's elder brother, Vinod Adani. Allegedly, he went to various countries to create offshore shell companies and that he was engaged in money laundering. In the report, Hindenburg identified 38 offshore shell companies in Mauritius, controlled by Vinod Adani or his close associates, and other companies in several tax havens such as Caribbean islands. They report that several shell companies do not even have a website. Some have websites populated with only stock photos. There are no employees in the company and not even proper addresses. Adani Group responded to this report. The first response was on 27th January when the Adani Group published a presentation with the title Myths of Short Seller. In response, they claimed to have stable credit ratings, that the companies of Adani Group meet various regulations as specified by the government. The Adani Group published a lengthy response to Hindenburg's report over the weekend, saying that it would pursue remedies to protect investors before all appropriate authorities. 2 days before this, on 25th January, the CFO of Adani Group said that the timing of the report shows that it was published with malicious intentions, that they are trying to undermine the reputation of Adani Group and the follow-on public offering that they are about to pursue. This was an attempt to damage that. The timing of report's publication clearly betrays a brazen, malefied intention to undermine Adani's group reputation, with the principal objective of damaging the upcoming follow-on public offering from Adani Enterprise. On 26 January, the head legal expert of the group threatened Hindenburg with legal action. In the response, Hindenburg Research says, "Bring it on." There was another response from Adani on 29th January. Hindenburg's 106-page report was countered with 413 pages. Adani published their report to counter Hindenburg's report. They claimed that there were selective and manipulative presentation in the public domain to set a false narrative. Additionally, they claimed that the report undermines Indian institutions and that it is an attack on India. Adani claims that 65 questions out of 88 are such that answers to which are publicly available. That if financial statements are read carefully and the stock exchange disclosures are checked, they can easily find the answers in public domain. And 18 of the questions are about public shareholders and third parties. So that has nothing to do with Adani Group. And the remaining 5 questions are baseless or based on imaginary fact patterns. Hindenburg's response to Adani's response was that the Adani Group had not actually answered any questions. Hindenburg claimed that in their response, Adani Group is merely claiming that they have the approval of the government regulatory bodies and that the data is publicly available, but they haven't properly answered any questions. In terms of patriotism, Hindenburg responds by saying that fraud cannot be obfuscated by nationalism or a blotted response that ignore every key allegation we raised. They claim that Adani is using nationalism as a shield. The Adani is trying to escape the questions. Hindenburg goes on to say, "We believe India is a vibrant democracy and an emerging superpower with an exciting future." So it's clear that Hindenburg is not doubting India's democracy or the fact India being a superpower. In their own words, their sole target is Adani Group and 60-year-old Mr. Gautam Adani. Overall, Hindenburg is so confident about its allegation that in the 4th point of the report, they said that even if we were to ignore their investigation, cited by Hindenburg in their report, and take the financials of the 7 key companies of Adani Group at face value, even then they are 85% overvalued. Ever since I shot this video, and today, the day of release of this video, there have been major updates to this story. Updates that hint at the Adani Group of companies getting into deeper trouble. 2 major updates. First, Forbes accused Adani of buying his own shares to inflate his stock price. Second, Credit Suisse, an influential investment bank based in Switzerland, stated that from now on they will stop accepting Adani's bonds as collateral for any loan given out by the bank. Basically, Credit Suisse has assigned a zero lending value to Adani Group bonds. The same thing was said by Citigroup's wealth unit. And third, Adani Group cancelled their FPO. They said that since their share price was fluctuating so much, they cancelled the FPO on moral grounds. In total, the losses borne by Adani Group of companies amount to 86 billion. Well, that's it for today's episode of Let Me Tell You. I hope you enjoyed learning something new, and I love to hear your thoughts in the comments below. If you want to stay up to date with all the latest and greatest content, be sure to hit the like and subscribe button, and your support helps us create more content like this. Thank you for watching, and until next time, stay curious and let me tell you more.